Welcome to MarketX's monthly webinar. We're really excited to be having you all joining us today to go through some of the latest macro news and some of the insights we're giving you from both ourselves and our very interesting guest who's joining us today, Logan from Frictionless Capital. We're going to be going through everything from SVB to how crypto might be an answer to the banking challenges we faced, and then beginning to go into international relations and how to position ourselves correctly later on in the episode. I'm going to hand over to you guys to do the introductions, and then we'll get started.
Thanks, Cal. Welcome to MarketX. It's really amazing to get Logan joining us today. We met at a Web3 Founders Dinner, so it's nice to see the Miami founder Web3 scene growing.
Very true.
But love to first of all tell our audience a little about you. How did you end up doing Frictionless?
Perfect. The true story behind Frictionless is no one would hire me in blockchain or Web3. I was previously at Tesla. I was running the global supercharging network, got into crypto in 2017, and between some of my investments in the bear market and my Tesla stock doing fairly well, I decided to do Frictionless.
Not a bad idea. How do you see the last few weeks? What does that say about the current market?
It's definitely been rough. I think if you only had one banking provider as a fund or even a crypto startup or startup in general, now you have definitely multiple banking partners as of today. Specifically with USDC, one USDC is equivalent to $1 that's held in a bank. And Circle ultimately has several banking providers, one of those being SVB.
Only 25% of it sits with SVB, so sometimes we need to think about risk diversification a little bit more.
I think in total they had approximately somewhere between like 43 and 44 billion in total.
Wow.
Like an aggregate across all banks. And SVB specifically, I think, had 3.3 billion. I think it was around 7 or 8% of the total cash that Circle was holding. When the bank run happened on SVB, people were very uncertain whether that cash that was held over the $250,000, which was quite substantially over the $250,000 mark, was ultimately going to be recovered. The government ultimately stepped in and backstopped all the depositors one for one, but there was a lot of uncertainty, fear, and doubt during that time, and USDC, I think, rightfully kind of depegged. And when you ultimately run the math, it worked out to, I think, the 7 or 8% USDC was sitting around 93 cents.
Wow.
So I think people were kind of valuing it correctly. And then ultimately on Monday, when people could start redeeming one USDC for $1 via Circle, that peg ultimately resumed. But it was definitely a scary time.
Yeah, I just remember on Saturday night, all of our friends got together in Dubai and everyone was like, it's scary. Should I go home right now and sell all my USDC? Like a bank run on crypto that's happening. Speaking of that, Silvergate, a lot of the crypto partners all failed in 1 week. What do you think this means to the entire ecosystem?
There's kind of a lot of issues combined into one. Many of these banks failed because of duration risk. It's been a very fast hiking cycle.
I think it also shows how closely connected these two systems are. But many of us were saying, how can the largest startup bank fail? When it comes to thinking about insulating ourselves, is that even possible at this point?
I do. It's kind of like banks are the ports and crypto is the ocean. At least until the US provides a lot more clarity on crypto and crypto startups, a lot of this will move to other places in the world. But for crypto in general, it's very early. And I think from my product background, I was always very captivated about under the hood, how many people are using these, how often do they kind of return to the site, like basic product metrics. And when I peeled back under the veil of number go up or token go up or just like volumes, I found very few people actually using blockchains. With OpenSea and Uniswap, maybe Uniswap just crossed over 5 million. I think maybe they're at 6 million lifetime users.
Really? Wow. I didn't know it was that low.
Yep. And OpenSea has less than 5 million accounts that have ever interacted with the wallet. To answer your question, whether it's Luna, FTX, I think the industry is trying different things. We are experimenting, and some of those experiments will work. Some of them will not work. Some people will take on too much leverage. Some people will blow up. And I think the long term, our kind of point of view is figuring out how do we actually take crypto from this relatively kind of few users that exist today, and I mean relatively small market cap comparative to other asset classes in the world, to something much larger.
And of course, the other big story recently has been the banking instability, most notably for the VC space in Silicon Valley Bank and its apparent collapse. Catherine, have you ever seen anything like this in your career?
Not in my lifetime, but I do remember in 2012 when I was still a trainee at Rothschild, and somehow we're walking and some of my colleagues lost access to the building. That's how they got fired. So kind of similar to that time. We have Lehman Brothers, obviously, but I think this scale and how fast everything unraveled was like really truly astonishing. And as a regular consumer, I would be very worried about what's going on, right? I mean, financial systems have really transformed in the last decade, I would say, right? With the invention of blockchain, I mean, when I met Vitalik in 2014, very few people understand what Ethereum is. I mean, I don't want to get into this too much, but I remember, Logan, you told me you don't believe in ETH anymore.
Happy to go down this rabbit hole. Yeah, on Ethereum, I mean, to back up a little bit, as I said, I entered the crypto space in 2017, and at that time, I mean, Ethereum was really the only kid in the block. It was really interesting what you could do with it, the invention of smart contracts, and really everything was happening on Ethereum. And then as kind of the bear market continued, that was still the case. And I would paint myself squarely as an Ethereum maximalist. I think ultimately where I kind of got a little bit jaded by Ethereum was just how slowly they were moving, particularly once DeFi summer started happening in 2020. There was a lot of cool stuff happening, but that's also when gas fees started to really spike. And then in 2021, with the NFTs taking off as much as they did, it really highlighted that Ethereum needs to scale and scale yesterday.
So on that topic, right, like what do you believe in? If Ethereum is not the one, which one should we believe in?
I'll paint it with a broad brush stroke again. How we describe it, and I think this analogy is directionally correct, it's not one for one, but in the early days of the internet, you had 56K modems. You couldn't really build very many interesting applications. Broadband ultimately came along, and engineers had the ability to kind of upload photos and very kind of low resolution videos. And now you have fiber optics, and with fiber optics, you can stream 4K gaming with extremely low latency in real time. And each of those were an unlock that happens when you are able to kind of increase the sandbox for developers. And at Frictionless, we have a similar point of view of what's happening with the blockchain world. Bitcoin was the first invention of blockchains and kind of self-custody. Ethereum came along and expanded upon that with smart contracts, but really kind of has taken its time in exploring different scaling solutions. So we kind of use Ethereum similar to broadband, but there are new blockchains coming on the horizon and some that exist today that are much more like fiber optics. And those blockchains, I think, are really going to take the industry to the masses.
There are definitely emerging, chains, which I think you mentioned about Solana. However, sorry to bring this up, but like almost every other weekend, we see an outage and everyone going, what's going on, right? Like, how do you see where the entire ecosystem is evolving, and what are some maybe obviously there's always mistakes to be corrected and there's always progress to be made, but what do you think is really lacking right now in the entire crypto ecosystem?
So I think it's a combination. Like our whole thesis is you have to invest in founders and builders building on the correct technology stack, and they have to be building for also Web 2 users. So the correct chain, correct product. And I don't know if that overlap has really existed as of yet. As I mentioned, the scalability of these new next generation blockchains like Solana are still very new. As you mentioned, Solana has had its issues. If you study kind of the history of Ethereum as well, Ethereum had multiple issues in kind of its early journey with the DAO attack, kind of DDoSes. So I don't know if, Solana has particularly kind of fallen on its face multiple times, and there's no way to sugarcoat that. It does suck. I think long term though, kind of the more prolific blockchains will have multiple clients. Ethereum is the only blockchain today, and by clients I mean different versions of the software. And that's extremely helpful because if one of those implementation fails, the other versions of the software are there as backups and can still operate the network.
So on that topic, right, we talked about the growing ecosystem, just like how Silicon Valley is really the home for tech, right? We think about decades of work, Y Combinator born out of Silicon Valley. And you mentioned, the movement of crypto, right? Because of the U.S. latest sentiment from the regulators, we have seen a really growing number of folks moving to places like Dubai, Bahamas, and Zug, right? These are like crypto haven. What do you see as kind of some of the top places people are moving to?
I know Portugal is also one, as you mentioned, Dubai, Singapore. Yeah, unfortunately the US is shooting itself in the foot, and I think, or at least I'm long-term optimistic that the US will course correct, even if it does shoot itself in the foot initially.
On my end, right, what I thought was very interesting is that I was speaking at a family office conference in Dubai, and funny enough, we actually get to work out, like literally, lift some weights with the sheikh from Dubai. And on this, journey, I realized how open they are to the entire innovation economy, right? First of all, ADGM, that's the Abu Dhabi Authority, and DIFC. Both of the regulatory bodies have spent a lot of time and putting a lot of human resource to learn about this innovation and bring talents from around the world together to Dubai, Abu Dhabi, and some even to Riyadh, right? Because the governments are the ones really dictating where the talent grows, where can we foster a sense of, we're all developers here, helping each other out, building for the future, right? And that is a very unique sentiment compared to the US today. Why are we so protective compared to other economies, compared to Swiss, FEMA, we have the Bahamas entity, and also if you look at where, Singapore has taken this footing as well. Like, why do you think compared to other governments, we're so protective?
Going back to even why we're not bullish Ethereum, I think people don't like change, and I think that's also true for the government.
Blockchain obviously is a huge innovation that happened. Where do you see, in terms of the next 10 years? If you have one prediction, what would that be?
From a technical side, we have a long way to go to actually onboard these people, but I'm very confident over the long term. One of these new next generation blockchains architectures, or a couple of them, will be able to do that, and over the long term, a lot of these kind of traditional finance applications will be moved on chain.
At MarketX, obviously, we're bringing together, ecosystem of startups, especially with secondary markets. Today, we actually offer clients the option to buy, any kind of secondary shares from, using their USDC, USDT, right? And actually, due to the latest banking run, I think folks actually have spent more time trying to use their USDC to buy this. Why? Because perhaps, from some of my clients, it sounds like if you get into shares of, Stripe, SpaceX, it may be safer or less volatile than trading, your coins. I mean, I'm just curious, how do you see the intermediation or the combination of traditional finance, also Web 3.0? Do we have a Web 2.5 in front of us?
I personally don't really see it like that. I think it will I kind of view it as an hourglass. And these Web 2 kind of either fintech companies or just Web 2 institutions are going to be kind of slowly and more methodically coming into Web 3. And I think that's on a high level why we focus so much on the infrastructure. Just as I mentioned, it's not able to actually support scale today. But we fully expect in the long term, these players, the infrastructure in Web3 will be built out such that we can support those.
Well, so Kel, what else happened in the last few weeks?
Well, just beyond the financial instability for a second, I think there's been a huge amount of turbulence from a geopolitical standpoint as well. When you think about what's taking place in the Middle East right now, and almost shifting in lines of who might be considered an enemy and who might be considered a friend. And then we've also got things taking place with North Korea, and then the continuation of Russian and Ukrainian conflict as well. And so all of these things are culminating in a more fractured geopolitical environment. And so, Catherine, I'd be really interested to hear from you how you think we should best position ourselves in this increasingly multipolar world where typical alliances that we once considered robust and there for the long term might not be so going forward. So I'd be really keen to hear that from you.
Thanks, Cal. I'll just share a little bit from my travels, and people may have different experiences. I would say the key word here is diversification, right? As we all know, in the last decades, we have seen the rise and fall of great powers, right? We have known that history always repeats itself. Right now, we're in I would say, decade of anti-globalization, you may say. The U.S. and China conflict is obviously pretty, tense. We have seen the governments really having a trade war, right? You've seen, semiconductor industries forced to reallocate resources around the world. With the Taiwan conflict looming in the near future, many of the investors, such as Saudi Arabia's government, are putting more and more investment in a semi-industry in Korea, for example, right? In the latest news, they signed a $9 billion, MOU to basically help the local industry grow in South Korea. On the other hand, we have seen Eastern Europe. So for example, due to the Ukrainian war, a lot of the engineering talents from Ukraine are moving to countries such as Moldova, such as Poland, and resettling and building a local Eastern European bloc in terms of engineering companies. We have seen, companies such as UiPath born out of Romania. We have seen Pipedrive born out of Estonia, right? So we're very excited about the global diversification of talents, of resources, and that will lead to more exciting investments around the world besides local areas such as Silicon Valley. And at MarketX, we're definitely strong proponents of investing in global startups. And on that note, Cal, what do you think about some of the latest trends happening right now that excites you?
Yeah, of course. I think you really hit the nail on the head there. That I think VCs have a really interesting opportunity set in front of them right now, which is helping reallocate resources and processes that are now challenged by these geopolitical themes that we're seeing right now, whether it's semiconductors and needing to place them in new geographies such as South Korea. We're looking at a couple of very advanced kind of AI semiconductor companies that suddenly have a huge opportunity ahead of them and the ability to capture a lot of market share from Taiwanese competitors. I think beyond that, on a more simplistic basis, I think there's a huge immediate opportunity to steal away from a lot of the innovation that legacy banks were providing in the US as they're now challenged and find profitability more difficult going forwards. I think fintechs have an ability for the next 18 months or so, as R&D budgets contract, to kind of really take a march on building out the next generation of financial products as well, which I think is really exciting. I'd be keen to hear from Logan actually, and just kind of linking to that point where he thinks crypto can come in and provide some of the services or things we need as everyday consumers or even citizens that banks have kind of largely failed to do, in this period of time. How could crypto step in there?
I mean, the original promise and why we got so excited about Ethereum and smart contracts was kind of banking the unbanked and providing kind of what is now known as decentralized finance to the globe. Being able to have a savings account, being able to access kind of credit or get loans. I think majority of people today typically interact with the internet through their smartphones, and going forward, I think banking will primarily be viewed through that avenue, and I think blockchain can play a big part in that.
I think we're standing at a very interesting point in history, both for venture capital and then the economy more broadly. But I think the point that we'd all kind of take away from this discussion is that whilst things have been challenging over the past couple of months and things look uncertain going forwards, we're still here. We're still looking to allocate capital. We're still looking to capitalize on opportunity. And I think, Catherine, as somebody who's experienced as you, who's been through these situations before, these situations are often the best times to allocate capital, the best times to invest in growth, and those companies that are truly paving the path over the next 10, 20 years or so. I know I'm excited to keep working on innovative and disruptive companies going forwards. I think this conversation has been really educative from my point of view. And I think I can thank Logan for joining us today. It's been really informative. Thank you.
To wrap it up, obviously, going forward, we're going to interview experts such as Logan to share their perspectives on the future of blockchain. We're also very excited about the space sector. Me and myself just came out of a Saudi, the first government-sponsored space demo day, which was also very interesting. We'll save it for the next time. But thank you everyone for joining us this week, and look forward to see you next time.